Hello, and welcome to another Bitcoin update. Today we're going to take a look at a few different scenarios for the recent Bitcoin price action. Are we in bear market or is there still hope for the bulls? So the first scenario here is a WXY, a bigger one. So here we are counting this as a wave W, and then we have A, B, C, a zigzag in wave W, wave A, B zigzag in wave X to finish wave Y and finish wave X in a higher degree. So this is like a W, W, X, Y, X, and then looking for a move down into a Y. So after wave Y is finished, then we go up because this is a corrective move. Then we have a bigger expanded flat. And here we are counting this as an ABC into a wave A, ABC, wave B. And now 1, 2, 3, 4, 5, an impulse down in 1. And then we have 1, 2, 3, 4, 5 into a wave C. And after that, we are moving up because this is also a corrective structure. And this is a WXY with a finishing zigzag. Here we need to count this, that this was the high, the previous high, and now we have an A, B, C, a flat, expanded flat into a W, X, and now we are finishing with a zigzag. So I get to the probabilities a little bit later, but this is a scenario as well. And after that, we also have a bullish scenario. All of these were bullish, I forgot to say. Here we are counting this as a W, a wave X, and now a bigger triangle. So A, B, C, D, E, and then we go. This is also bullish. And the last scenario for the bulls is an ending diagonal. So this is similar to the one that we had the flat scenario, but here the ending diagonal is finishing a little bit earlier. So here we have a wave A, wave B, and now we have a diagonal. 1, 2, 3, 4, 5 into finishing wave C, and then we move up. So this is also a corrective structure. And if we move on now to the bearish options, what do we have? We have a finished diagonal looking at a bear market. So this counts as a 1, 2, 3, 4, 5, an impulse, the first wave 1, then we have WXY into a wave 2, and now we are counting this as a 1, 2, 1, 2, 3, 4, 3, 4, 5, 4, 5, 4, and so on, basically entering bear market. And also a variant of this is this, a bigger wave 3. So this is the same as the previous one, but this is a 1, 2, and now we have a 1, 2, 3, 4, 5 into a bigger wave 3. So that was all of the scenarios. So which one have the highest probabilities? This one, if I start with this one maybe, yeah, WXY. This has not the highest probability because it's not super uncommon, but if you see here W and then ABC into a W and then ABC into a wave X, wave X's doesn't have any rules that they may not form a new low or a new high, but it is preferably not so that they are doing that. It's most preferred that they, if you have like a structure like this, 1, 2, ABC like this, and then a wave X, and then ABC. So you can see here, wave X here didn't take out this high. So you don't really, it's not a rule or anything, it's just a preference that wave X should not really take out the high or low, but it's not a rule, as I said. So it doesn't really have the highest probability, but then again, it doesn't have the lowest probability either. It's just a in-between kind of scenario to drag on the consolidation for a bit longer, and it fits quite well with this macro count that I have on the higher time frame. And I also have a fib time cluster here predicting a little bit of an end to the bull market. This is on July 2026, but it could be over sooner. This is just an experiment, but it fits well with the narrative of a long wave 4, if we put it like this. So this has a higher probability in terms of time that we're not done yet. But still, this scenario is, as I mentioned, looking for higher prices. So it's not invalidated or anything. It's just a middle of the road kind of thing. And then we have the biggest expanded flat, and this has it's a decent probability. It all depends on the price action over here. I will get to in a bit, because how this probability works out. But as it is now, it's totally fine. It doesn't break any rules or anything. This counts better as a 1, 2, and then a 1, 2, meaning that this scenario counts better as a 1, 2, 3, 4, 5 instead of a, as I mentioned, 1, 2, 1, 2, because then we are looking for such a deep wave C that the common target for wave C isn't really hit, because the common target for wave C is between these black. And if we have a 1, 2, 1, 2, like this 1, 2, 1, 2, then we need 3, 4, 3, 4, 5, and then wave C becomes very extended. It's not invalidated or anything, not breaking any rules, but it's very uncommon to have a wave C over 400%. So this counts better as a 1, 2, or a 1, 2, 3, 4. Sorry. And then we are moving on to a WXY, finishing wave Y here with a zigzag. This doesn't really have the highest probabilities, because of this move counts better as being finished here. Because if you count this move just with your eyes, like 1, 2, 3, 4, and then you need to have a 5-way structure. So 1, 2, 1, 2, 3, 4, 5, 3, and where's your 5? You need to have a wave 4 and then your wave 5. So you kind of missing out on 1, 2, 3. Yeah. So in this scenario, you need to have finished the bull market, or not the bull market, but the wave 5 over there. And that's not really the highest probability. Otherwise, this works fine, and it's important to be aware of this scenario. Then we get to the more higher probability scenarios, and that is a triangle. So a triangle is, it's very early to talk about a triangle. You don't really mention it unless you have wave D in place. But in this messy structure that we've had on Bitcoin, it is important to be aware of, because it counts very well as a triangle. You can see here W and then wave X, and now we have a ABC or a WXY. And the reason why this doesn't really have the highest probability is, number one, that we haven't hit the wave D yet of the triangle, and number two is that this move down counts better as a WXY than an ABC, because if this were to be an ABC, you need to have 1, 2, 3, 4, and then 5. And as I mentioned in my previous videos, that this move down doesn't really look like a 5-way structure. It could turn out to be a 1, 2, 3, 4, 5 like that, but as it is now, it doesn't have the highest probability of being a wave 5. And if it's not a wave 5, then we can't count this as a wave A, B, and a wave C. Then we need to count it as an A, B, C, WXY and then an ABC down. And if it is a WXY, then the triangle doesn't have the highest probabilities, because in a triangle there can only be one complex structure, and that complex structure is usually in wave C. If it's not in a wave C, it's in a wave D. It's very rarely in the wave A. So therefore, this doesn't really have the highest probability. And if we move on to this, is a perfectly viable scenario, which is the one I'm more biased towards. It's an ending diagonal. So this is the same as I mentioned with the biggest expanded flat, A, B, C, but this is finishing wave C with a diagonal. So here we have wave A, B, and then 1, 2, 3, 4, 5 into wave C, which fits very nicely with the length of wave C in a flat. And you can see here the prime target for wave C in a flat is here, 161.8, and it's also between these two black pivots here. So that looks very very good in proportions to be a wave C. And this channel, which I have taken, is taking like a channel tool, if you have that in your trading program. So you take it from this pivot 1 and 2 and then drag it up to this, and you can see that these are horizontal with each other, and the most common diagonal is an ending diagonal. It's very unusual for an expanding diagonal. Therefore, if this price touches this channel, it's no longer contracting. And if it's no longer contracting, it doesn't have the highest probability, because then we need to count it as an expanding diagonal. So that is like a soft invalidation, this line for the diagonal. You don't want to move up and take out this line before having a 1, 2, 3, 4, and then another move down in a wave 5 to finish wave C. So you don't want to hit that on your way, because then this scenario is not probable at all. But other than that, I'm leaning towards this, the ending diagonal. We could have another move down here to have like a WX and then a Y. It's perfectly fine. What you don't really want is a deep, super deep, because then you are looking towards this option, which I will get to now, the bear market. So here we are finishing the bear market, or the bull market rather, here with an ending diagonal. And then we have a wave 1, 2, and then we have a wave 1, 2, 1, 2, 3, 4, 3, 4, 5, and so on, so on. And this has a reasonable high probability because it counts better as a 1, 2 than a single 1, 2, 3, 4, 5. So if I do it like this, instead of counting it as a, you can see here it's a 1, 2, 1, 2, 1, 2. If we were to count it like this, a 1, 2, 1, 2, 3, 4, 5, the 3 would be fine. You need to have like at least 161.8, but the internal count here is what is bothering me, because here the wave 3 only hit 127.2 fib, which is very uncommon for a wave 3. And that means that you need to have an extended wave 5, or you don't have to have an extended wave 5, but if wave 3 is not extended and wave 1 is not extended, then it is by default that wave 5 is usually extended. And an extended wave 5 is not the most probable scenario, and therefore this scenario doesn't have the highest probability, just because of this not hitting the 161.8 wave 3. So this doesn't really, I don't really like the count of this, and we basically would need to have the minimum target here of wave 3 in order to be certain of this count, meaning that this wave 4, meaning that this wave 3 rather is not really over, and this is more like a 1, 2, 3, 4, 5 into a wave 3, that kind of thing. So here we want to see wave 3 stretch a little bit deeper down, basically. And the invalidation for this, if you are a bull, you want to see this being taken before we go down like that. But if we go down that far, yeah, the invalidation is still taking out that. But yeah, you understand. Before we go any deeper, we want to take out this, because that pretty much invalidates the bearish count. So yeah, that was pretty much it. I would like to remind you of the weekly macro count as well. Once again, that we are looking for a 1, 2, 3, 4, and then ending wave 5. So that has the highest probability. So you have to kind of add everything together with a macro count. You have the all of these scenarios with the different probabilities. The move down doesn't really count well as an impulse. Take everything into consideration. Make up your own mind of the probabilities. But in my case, if we are not getting a super like high volume spike down, then the diagonal have the higher probability for now. And especially if we take out this, the invalidation for this 1212 at 106,313.64, then it is way higher probability that this is a corrective move and that we are moving up at a later stage. Because as I mentioned, the other impulse down and everything doesn't count well as a clear 1, 2, 3, 4, 5, because we need to have the extended 5. It is possible, but it's not invalidated or anything. We're only dealing with probabilities, and judging by how everything has looked before, it's the least probable scenario. But yeah, we have had crazier things happen. I mean this move down, I mean what was that? Before that, I mentioned that this has a higher probability of being corrective, and we move down because of the tariff. So everything can happen. We're only dealing with probabilities. Yeah, that was pretty much it. Leave a comment if you want, and hit the thumbs up button if you like it. I don't really know if this format, if you like it or not, because I'm just starting my channel. So if you like it, leave a thumbs up, or if you don't like it, please leave a comment to have some feedback. It's very valuable to me. So I hope you have a great day and trade safe as always.